Today I would like to talk about Deutsche Post AG, or also known as DHL Group. So they are the international company in shipping and delivery, and they have a strong market position. The interesting thing is the stock price declined about 15% in the last 6 months, and in 1 year they're also down 17%. But in 5 years they're still up, and the all-time high was about 60 euro, so it's way higher in the past than right now. So it could be a good opportunity to buy, so we have to take a look at the financials to find out. So the first thing we can notice is the market cap of 42 billion euro. So that's not a small company, but also when we compare it to their competitors, we can see they are bigger, with UPS $107 billion and FedEx with $67 billion. So they are on the third place, and this can also mean that they have more room to grow because they are not yet at the same level like UPS. So let's take a look at the financial foundation. The first thing we are looking for is the revenue to grow, because we want to invest in a growing business and not a declining business. So as we can see here, the revenue did grow over the 5 years, and it was 63 billion in 2019 and 81 billion in 2023. So that's a check here. We would also like to have a free cash flow growth over the years, because this is how the company can buy back the shares or can pay the dividend. So it's very important for us. And we can see here that the free cash flow did grow, and it's now at 2.94 billion euro. So it's a good amount, but it also did decline from 2021, because obviously in the Corona time, the most people ordered online. So this is where the company did make the most of the money. But I still think it's a growing business, because people would like to order more online nowadays. So it's also a check mark here, because the free cash flow did grow over the 5 years. So something very important too, free cash flow yield over 4%. This shows also a little bit how the valuation is of the company. So we're gonna use the number here, the 2.94 billion euro. And then we're gonna divide it with the market cap that we have here. So this will give us a free cash flow yield. And okay, this is about 0.68. Okay, this means 6.87%, which is a very good number. It's over 4%, and it's a good number. It can mean that the company is undervalued, but we also have to consider that the free cash flow could decline more if we come in a recession and people ordering less online. So we have to keep this in mind as well, but it's a check here. So the next thing I'm looking for is debt to free cash flow ratio under 5. This means we can pay back the debt with our free cash flow in under 5 years. So we will take this time the net debt. It means that we take the debt and minus our cash on hand. So it's actually now lower than normally the debt would be. So we take this number anyway. It's 17.73. So we're gonna divide it with our free cash flow, and then we will get a number. Okay, and that is a little bit over 6. So it means in a little bit over 6 years we can pay back the debt with our free cash flow. And it's not a great number, but it's not too bad too. So it's not a check here, but it's not too bad. The last thing we are looking for is shares outstanding decrease, especially if we have a accomplished business already. And when the stock is also cheap valued, we want that the company buy back shares. So we take a look here, and we can see they did actually buy back shares over the years, especially in 2022 and 2023, but also in 2020. So there are many years they did buy back shares, and this is also a check here. I think it's a very interesting company. It has a solid financials, a solid business as well. So it's a business that can keep growing because we will more shop online nowadays than before. And I really like this company. It's really about when do you buy this company, if you wait a little bit longer for lower prices or if you already try to get a position here. They also have a 5% dividend, which is really nice. So I think it's a solid company and I really like this. So I hope you liked the video and please don't forget to subscribe and like the video.